everybody. Jumping right in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRECIPIC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. I added FSR and BYND. I got into Beyond here after hours. I'm trying to blast it at disclosure because I got to manage this position. I just crushed this. Let's go with the short squeezes here. Those numbers hit. They were solid beats, and they just started ripping this thing. And you know how bad the short float is on this. I don't know what it is exactly, to be honest, but it's huge. And in an environment here where they've started to squeeze 40%, woo! In an environment here where they've started to squeeze all these names, that's been a big trading focus for us, I think, the last couple of days, quite successfully. Just throw this in there, you know, quick 36% after hours move and Beyond Meat. I mean, it just brings it back to $10. It just brings it back to where it was in December. But yeah, this is the environment that we're in right now, and this is what we have to pay attention to, and it's becoming more of this momentum environment. But it's interesting because it's doing it. I'm probably echoing on YouTube. Hopefully I fixed that. It's doing it within the confines of the SPYs and Qs actually taking a 3-day rest here, which I mean, I can't think of a more bullish situation right now than the IWM giving the continuation that it's giving, growth stocks beginning to squeeze up, and the SPYs and Qs taking a bullish rest. With that said, we definitely have to be a little bit careful because we have seen a lot of these bigger rallies over the course of the last couple years that get close to their end once we start seeing all the junky squeeze stocks squeeze shorts. So potentially this is just one more signal here amongst several other signals that we are getting closer to the last inning of this incredible market rally that we have been dealing with since the beginning of oh, give me 1 second here. Since the beginning of November. Wow, big downtick there. My low bid there, 56. I gotta figure that. I do 1, 2, 3, 4, 1, 2, 3, 4. Perfect. Loving how this Beyond is trading here after hours. It's also completely insane. Cool. I got my offers out. It was a really fast downtick there. I got refilled on a lot of stuff. Boom, right back up. Sorry, this is kind of an occupational hazard occasionally here. Why don't I have offers out there? Where sometimes I try my best to not over trade. 1, 2, 3, 4, 5, 6, 7. I'm missing a piece of stock. I try my best to not trade too much when I'm supposed to be doing the afternoon meeting because I like to give my focus to you guys. But as much as I love you guys and as much as I want to do a great job in all of our meetings all the time, I gotta make money. So anyway, I think I'm caught up for the moment on this Beyond, but I gotta keep an eye on it. Yeah, so like I was talking about, I can't think of anything more bullish than the situation that we're seeing right now. The SPYs and the Qs for the second day in a row here were really very boring. I got the SPY 5-minute chart up here. There was some action, you know, grind lower. This has very much been the theme of the last year plus. I bought, my average price on my buy was like $9 on the way up. But I had a string of buys on the way up initially. Thanks. This has been a theme for a lot over the course of the last year and a half, even on these digestion days where you get opening weakness, midday V-bottom, strong afternoon. We know that a lot of that has to do with just the zero DTE dynamic of the current market that we are involved in, so it's not that surprising. But at the end of the day on the daily chart here, you can see here that it's just a continuation of our bullish rest that this market has been providing, where just a few mornings ago we were kind of in no man's land. A couple mornings ago we were in no man's land where we're getting decently extended to the upside but not hitting extreme extension, and that was a rest day. Yesterday was a rest day, price and time, and then today we broke through this low, just about ticked the ADMA here on the daily chart, and then we traded back up. So, I mean, that is a perfect potential next pivot for this market if it wants to give continuation and if it wants to accelerate. That'll obviously be influenced by some of the macro events that we have this week. What do we have tomorrow? A GDP number? A GDP revision number? And then I know we have PCE on Thursday, which is the big one. So that'll influence the market technicals here, but this 2.5 day or 3 day digestion period here for the SPYs is phenomenal. The Qs today were even more boring in some ways. Maybe not, actually, now I look at the chart. Decent little bit of volatility intraday, but it's the same pattern that, again, we've continued to see so often over the course of the last year and a half. Weak morning, midday V-bottom, strong afternoon, closes well, and what that also gives you is a potential pivot low into the ADMA on the daily. So the SPYs and the Qs are both basically telling us that we can look to be long tomorrow versus today's low to see if we can get continuation now that we've had 2 to 3 days of rest after the NVIDIA day, and we've maintained, and the market has managed to hold the really important low of the NVIDIA day, which we keep discussing, which is 433.71 for the Qs, and it is 503.02 for the SPYs. And it's doing this with IWM leadership, and that's the thing that I really love. We had noted yesterday morning, and then again we repeated it yesterday afternoon, that Bank of America note from the CTAs and what Bank of America is expecting the CTAs to do as far as fund flows right now. And what we had noted was, sorry, I got a partial fill. Partial fills are annoying. What we had noted was that whereas there is potentially some over positioning at this point in the S&P and the NASDAQ, which again certainly does not mean that the market can't get bought up a little bit further, while there is some over positioning there, the IWM was set to potentially have a little bit of a catch-up trade with the CTAs focusing a little bit more buying in the small caps and the mid caps. So then yesterday we saw great strength, great leadership from the IWM. It went red to green right off the open and was nice and strong, while the Qs were weaker, and then gave a great follow-through day today. And what we've noted about this daily chart here technically is that it looks much healthier now above 200 than it did on February 12th or on February 15th when the last two times it got up there. It was both on the third day of like a really big move higher where there was a lot of extension. Yesterday's move through 200 and close above 200 was with zero extension, and then today we got some continuation, but there's not any real extension, I don't think, in the IWM yet. So we're at 204 with the ADMA. It'll be at like 201 plus probably tomorrow. So $3 of extension in the IWM. You're working towards that no man's land of extension, but you are certainly not there yet. So the Russell chart looks great, and when we see the IWM go, what we're seeing happen here is these short squeeze names are moving with it, and that was definitely a continued focus for today. Carvana, you know, I don't think that was necessarily a trading focus, but it's very notable, this inside and up with the continued squeeze that it had. This Carvana today really started with this high volume bar at 945 when it broke these two inside fives to the upside. It was a really nice trade if anyone actually took it. I know it was communicated in the VTF. I still struggle, despite what I've spoken about here the last couple of days, about buying these extended stocks for further extension. But like I've been talking about, this is the right market environment. If you're ever going to do any chasing, any momentum trading, this is the right market environment to do it. We are in an environment right now where a market that's extended to the upside can become significantly more extended to the upside, and it can do it in a very short period of time, and we're seeing that with a lot of stocks. I'm seeing Zahor mention Jumai. I always get a little nervous when I start seeing the Jumais of the world run, that you could be getting close to the end. But yeah, massive move for bull flag continuation in this piece of junk, that they were able to just squeeze it higher. AI did a day 1 yesterday. It did a day 2 yesterday. Sorry, 1 second again. Yeah, so AI did a day 1 yesterday, did a day 2 today. That SOUN all over the place, as high as $8 at one point this morning. BBAI, they started squeezing this one now. Remember, it was literally just last week that we were like, well, you know, if there's an AI bubble right now and NVIDIA is the poster boy of that AI bubble, why isn't the market starting to really squeeze higher on the junk stocks? You know, you'd think that if there's a real bubble, I think I literally said on Thursday or Friday last week when this thing was down here, that if we were really in the bubble portion at the end of the market run, you would think that this thing would be at, like, I said half sarcastically, $80 by now. And now here we go. They're all really beginning to run. And again, I said it at one point in the meeting, or maybe it was just during the day today. This Carvana had that short report yesterday, which these short selling companies should be careful about that. Because I feel like you put a short report out on a stock right now and you're just putting a target on your back. So yesterday, Carvana had a short report come out, and then today they were like, all right, well, how about we squeeze it an extra 16% in your face? And that's just exactly what happened. And then SOUN had one intraday today. And this is also, you're seeing like the gamma squeeze aspect come into these names. I mean, it's at a certain point today, I was reading it out loud, the bullish option flow that we were seeing coming into the market, it was just like one of these names after the next. It's Mara, it's Coin, it's Jumai, it's all these names, and they're just squeezing the hell out of everything. So I tried to focus on this Wayfair. Again, $55 has been a big resistance zone for this thing, and I'm looking at the volume coming on Carvana, and I'm saying, all right, let's go with the squeeze here. I just sold more of this Beyond. Awesome. You know, let's go for the squeeze here in this Wayfair. Unfortunately, I got shaken out of this one. I made money on it, not too much because I was very greedy. But, you know, started to go, struggled with that 55. I didn't really like this push through failure here that occurred at 10 a.m. And I trailed versus this low here, and I got pushed out here. And then it gave the fantastic follow through that I was looking for. So that's the environment right now. You know, spies and Qs, boring. That's actually probably a good and healthy thing. And my neighbor's pushing the snow out now with his giant cat. Yes, spies and Qs resting. You know, you had like the NVIDIAs of the world actually give shorting opportunities today. We talked in the morning meeting about shorting NVIDIA for the inside day and down. That worked beautifully as an opening squeeze. And then I remember literally watching AMD at its low today. And that was also a beautiful squeeze lower. I think Pat was looking at this AMD for a short. You had the inside and down there as well. I think I literally said at the bottom when this thing was kind of trying to make it a pivot for an oversold bounce. Yeah, but don't be surprised if you know, if you see this thing make new highs today, because that's just the way that this name trades. I think I need to liquidate this position. All right, sweet, it's awesome. Beyond up 49%. And then that's what happened also. But it's been a good two-way trading environment, and it's probably a really healthy thing overall for this market that they are resting a little bit on the AMDs and NVIDIAs of the world. And then, you know, you get Beyond here after hours. Now it's up 56%. It's approaching $12. The thing that we got to remember about these short squeezes is that when you begin to squeeze one name, it makes it easier to squeeze the others, because the funds that are out there that do a lot of short selling, for the most part, they're not like, yeah, we're only going to be short, Beyond Meat. There's a good chance that if they're short Beyond Meat, they're short, wherever Jim is with that great list that he has. They're short FSR, which I bought a position in. It's got earnings on Thursday. It's, in a lot of ways, is just a gamble on the short float, short squeeze situation that's going on right now because, worst case scenario, the stock opens up at 0 and I can afford to lose the 67 cents on the position that I have. Best case scenario is they begin to squeeze this because, again, if you're a fund and you're short Beyond Meat, which you guys just told me has a 40% short float, you're probably also short like the FSRs of the world, which I think also has like a 40% short float. So if you are getting squeezed in Beyond, it might be forcing you to cover in your FSR, in your Carvana, in your Wayfair, and yeah, I mean that's what we're seeing right now, and it's creating a lot of trading opportunity. But we just need to keep in the back of our heads that this type of trading, when this begins to happen, can sometimes mean you're closer to the end of the beginning. With that said, not that I'm expecting a true bubble like what we had in 2020 and 2021 to occur again. I mean, I don't know. You could type up on probably literally any growth stock and go back to where it was trading in that period and just see some really insane prices. Yeah, Beyond Meat as a $200 stock. Again, type up any name that you want that is one of these types of stocks, and they're still probably down 90% from their highs. But the real reason why I'm bringing this up is that on the one hand, I'm saying this potentially means that the market's getting a little ahead of itself, and sometimes we see this happening towards the end. But on the other hand, the thing that we got to remember is that when these squeezes take off, they don't necessarily have to, maybe it only last for a day or two, but it could last for weeks. It could potentially even last for months. And it'll look like an insane bubble move to us, and we'll all be talking about like, oh my God, is this really the end? If you see, I don't know, let me pick something crazy. If you see Beyond Meat get back to $25 over the course of like a week, you're like, oh man, this is getting crazy. This has to be towards the end. But just keep in mind, this did come from 200, and they were able to squeeze these things for like months at a time when we actually had that real bubble in the marketplace. So yeah, a bunch of stuff that we got to keep in the back of our minds, but on the forefront of our minds should be that this environment right now is providing a tremendous amount of trading opportunity. We can't be afraid to reasonably chase, to some degree, the gamma squeezes when we're seeing them occurring with the consistent bullish option flow. And again, the market is just it's just providing us a lot of opportunity, and in some ways it's two-way opportunity, and into those big extension moves it's two ways of opportunity as well. I don't necessarily believe in Beyond Meat as a company, but I don't want to be the person that's honestly trying to start to short it here at $11.40, even as it's up 55%, because they could squeeze this thing another 100% from here. And that's just how market environments work from time to time. And the easier money for the moment, until this environment changes, is to be willing to buy those things. Again, I bought $9 in Beyond Meat after hours, is probably approximately my average price, and I did it over like 6 buys. That's me chasing momentum to some degree. I know it's immediately after a solid earnings report, and we know how heavily shorted the stock is, and we know the market environment that it's in. But this is the type of stuff that I'm talking about to myself, I can't be afraid to do right now. You could be like, oh my gosh, it's a $7-8 stock, and it just ripped from $7.50 where it closed. Do I really want to buy 9? And for me, I looked at it and I was like, with the potential of this thing to squeeze the way it is, and the execution there is difficult because I'm buying it on that first bar. Let me buy this thing at 9, and I can give it down to 8 area, and that's like, this actually goes back to, I forget who asked me the question yesterday about like my morning note about like how much space you might have to give initially, and it's like, I can take this buy here at 9. I can give this down to 8. But really, what I'm looking for and expecting, even if it pulls against me, is to not have to give it to 8. It's to have to give it to whatever pivot actually gets formed below $9 if I'm a little bit out of the money initially. That actually never happened. I was pretty much never out of the money. It just ripped. But I have to be prepared from a risk perspective to be able to give it back down to, and I was just roughly thinking in my head, $8 until it's able to give me that higher pivot. And basically what I'm trying to get across here is I need to be comfortable with the fact that I could have lost an entire dollar on the stock that I bought here at about $9. But that there's a higher probability that I actually lose less than that because there's a higher probability that I'm actually going to be able to raise my stop somewhere else based on a pivot point. And that's the type of thought process and game plan that I need to have as I'm chasing stock, honestly, in some of these names. Whew. Beyond Meat Burgers for dinner? I don't think I've ever had one. I think I had Beyond. I had their product, I think, at Dos Toros once when it was like a brand new thing, just to try it. But yeah, maybe I need to go out for Beyond Burgers and support the company a little bit after the money their earnings report here just made me after hours. T? What's the T on the level 2? What do you mean? What is T? Gossip? Is this some Gen Z language that I'm not familiar with? Oh, so that's interesting. Is your account doesn't clear through T3, Tate? I'm pretty sure you're on Lightspeed. T means that it's impossible to get a borrow on it. I don't have that. I have an L here. I have a gray L. Gray L means it's hard to borrow. So for me, I can get a borrow on this. The borrow cost is 0.06 per 100. It's kind of expensive for an $11 stock, but that's probably because everyone's already short the stock, getting smoked. All right, cool. So happy to answer any questions you guys might have. Give me a second here. Beyond Burgers are too salty? Thanks, Robert. I need to know that. I got to watch my salt. Somehow I have high blood pressure. I think it's a genetic thing. I'm in decent shape, but I got to watch my salt levels. All right, from Dave. I'd like to propose an IWM trade to the upside. Propose away, sir, kind sir. If you go super high time frame and look at the Russell over the past few years, you can see a very well-defined resistance level that we seem to be grinding up against a few times over the past few weeks. Okay. If I go super time frame, right? I'm going back to 2002. It's probably unnecessary on a weekly chart. I mean, this is a big resistance zone that to me looks like we're breaking out of, which is this $200 area. You have peaks here in August 2022, January 2023, July 2023, and then we had a push through failure in December 2023, and now we're getting above that level and holding above that level. If that's what you're looking at. Let me read the rest of your question. So very well-defined resistance. Since this is an index, how much momentum can this realistically have? It's a great question to ask. And what level would you say is good to set an alert out for if you think this could break to the upside? So to me, based on what I'm looking at, and you might be looking at the futures chart, which might look a little bit different if you're going back far enough. To me, it's already started. It's already started the breakout. And that's what I've been trying to get across on the daily chart. But now that I have the weekly up, look at this weekly here. Look, I love this pattern in front of a breakout. I love upper level consolidations in front of resistance levels. The market is telling you that it is basically creating a bullish consolidation where buyers are stepping up, but the overhead supply is still present. That's a great way to set up a breakout. So then you got this quick higher low here with this bullish consolidation. You get a retest of equal highs in this 205 area from a couple weeks ago, an inside week last week, and now the inside week is breaking to the upside to help. So there's no extension at all. And you look over at the daily chart, what that turns into is you know what I've been talking about these last couple of days, looking much healthier above 200 than these other tests on February 12th and February 15th. So to me, this looks like it's already going. Now, going back to more of your question about how much momentum can an index realistically have, that's a great question to ask, because as a rule, pretty much, you will never get a beyond meat style move in the SPY. You're never going to wake up and see the SPY up 60%, right? Just using an extreme example. So it's much easier for individual stocks to give big upside extension than it is for the market as a whole to be able to do that. But it doesn't mean that the market can't extend, one. Two, if any of these indices is going to extend, probably the IWM has the biggest capacity to be able to do that. I think we saw that in November in a few periods when there was brief moments of rotation into the Russell. So this, I think, has the capacity in some ways to extend further than like the SPY or the Qs, just with the way the setup is right now. But, you know, take it one step at a time. The same rules, I think, still apply. If we see the IWM becoming $7, $8 above the 80 on the daily chart, it could extend to 10, it could extend to 13 in an extreme situation. We know that can happen, but eventually it's going to have to price or time correct, and then it just becomes a matter of that higher low coming in. But I think that the daily chart and the weekly chart and the IWM look excellent right now, and like I was saying earlier, I love the fact that the Russell is going with the SPYs and Qs actually taking a rest over the course of the last few days. That's that bullish rotation that we've seen a lot in our uptrends in the market, like in that May to July period, and then again in the November to December period before this year started and the IWM weakened out. But in like the strong uptrends, it's almost like the market was taking turns. I remember specifically last summer, you know, your Qs would go, they would get like $10 of extension, hit that extreme extension, then they would rest for a day or two. But while they were resting, the IWM would go, and you'd get the broader market breadth push. And then that would extend, and then that would rest, and then the Qs would be ready for their next leg because they had satisfied extension by then. That's kind of what we're seeing right now. So, yeah, I kind of think it's already started. I definitely still have some concerns. I do still have the TQQQ short. I'm still in the money in it somehow. Though I gave back a lot of money post the NVIDIA report in that thing. So yeah, you know, for the moment it seems like we're setting up for that continued squeeze and even potentially market up, vol up, like we've talked about. Next question is from Rex. I was swinging arm from yesterday. Yeah, I think a couple people were. It was a good call yesterday morning for the continuation, but then it didn't do so well today. Arm from yesterday from 140. This morning, ARM gapped up but sold off since 7:30, and the market was still holding green. When ARM turned red, yeah, it's just a crazy stock, so let's keep that in mind. When ARM turned red, should I just cut it instead of holding till my stop? I think you should hold till your stop. ARM was a momentum trade through the inside day high. Would the gapped up turn into gap down, saying that the momentum is done? No, I don't necessarily think so. They could have gapped that thing down and had the buyers come right back into it immediately. Or it could have given a rest day and an inside day. It just happened to be weak enough to push down pretty hard that it may have triggered your stop loss, which just is what it is. I would not change my stop in it. I would not change my game plan in it. Otherwise, it wouldn't be worth holding. Am I a wimp or what? Is Beyond Meat here at 1250, up 65%? This is exactly what I'm talking about. This market can really go. I didn't want to be distracted by it anymore, so I hit out. Scrolling down here. I don't think they're that bad. From Ryan. 2 trades I'd love your feedback on. First is ARC. I went long after the 9:45 a.m. inside candle. Okay, I like it. This is one of those bull flag patterns where the gap itself is the flag pole. So that's great. I love that pattern. And you tend to get continuation off that flag base when the ADMA catches up to lows. Buying the break of the inside 5 to the upside looks slightly early to me because the ADMA didn't quite catch the base yet, but I think it's the right idea to take the trade, especially with everything I'm talking about not being afraid to buy things that are a little bit more extended than we might otherwise. Yeah, and then it worked great, inside 5 and up. Good continuation. Love that opening pattern. Yeah, your risk covered at 10.05. I moved my stop up to the low of the 11 a.m. bar. 11 a.m. bar. This bar? The 5-minute bar? On the 15-minute chart. Okay. Okay. You got shaken out of the dip at 12.50. Was I keeping this too tight? So maybe. Beyond Meat at 13.50, bro. Oh my god. So you technically violated my third rule of trading, which is that you need a new high to come in to confirm that that's the pivot low of the trend. That's the rule that I personally sometimes cheat on and violate. The first two rules, which is a pivot low and that the ADMA caught up to the pivot low, I follow 100% of the time, and you have that here on your 15-minute chart. This is a pivot, the ADMA catches up to it. Rules 1 and 2 are totally satisfied. Rule 3, it's preferable when you can get Rule 3 to confirm. So Rule 3 would tell me that I would only actually raise my stop and arc to that pivot low that you raised it to after the ETF was able to trade above 51.47. And that's the rule that you violated. I personally sometimes also violate that rule for reasons of money management. Basically, if you're trading off the 15-minute chart, at this point, you have no other stop loss except your original stop. And you're saying to yourself, you know, I want to be able to lock in a little bit of additional money. It's a money management thing. So I know that I didn't get a new high that actually confirms that this is the pivot low of an uptrend. But I'll raise my stop here anyway, and if I get shaken out, so be it, because I want the money. When I do that, though, when I cheat on that third rule, I usually don't raise my entire position to that stop. I usually just do it with part of it, where I'm comfortable with, hey, you know what, I got pushed out, it is what it is. And then we go there. So that way, you know, if you got shaken out of some, but the original stop loss held, then you actually would still have a smaller percentage of the position that you would still have at highs. The flip side is if it went all the way, if this move actually broke lows and broke your original stop, then you don't make as much money as you would have had you raised everything. So for me, I have my rules. My rules are important to me, but I've always said the third rule is the one that I sometimes violate, that I sometimes cheat on, specifically for money management purposes. So when I know that I'm doing that, I just try not to do it with my entire position. I try to do it with some of the position to make sure I am going to lock in some of that money, but some of the position I really tried to trade truly correctly, truly proper, so that I don't get shaken out of everything if it closes well. And I'd rather give back a little bit more P&L for the potential to make more. So I hope that helps. And then the other one you're talking about is Zoom. I went long after the fourth bar. I assume that you're talking about on the 5-minute chart. I like this trade. Or I can already tell you I like this trade. I'm a big fan when you get the big gaps of looking for a pivot to go long versus on the first test of the ADMA on the 5. It tends to be a pretty good trade, I think, in the long run. And that's what you got here. They rip it in the first 5 minutes. This is another short squeeze name. We talked about this one in the morning meeting to see if it had the potential to go, but we also talked in the morning meeting that historically they tend to sell earnings gap ups in this stock. So anyway, you do get the heavier pullback, you get the test of the ADMA on the 5, and it gives a perfect doji with a perfect downside tail right into that upper band of equilibrium. I love going long off this candle. then you got stopped out at 10.10 when a new low came in. I think it's a good trade. I hope that your execution was good enough, though it looks like it's very close, depending on exactly where you executed versus this low, that you're able to get your risk covered into this up move. I hope that's what happened. It looks like it was iffy on if that actually happened or not. Was I trying a momentum trade? I don't consider this a momentum trade, by the way, because you have no extension on the 5-minute chart anymore, and it's 9:45 a.m. It's not, if it was 10:15, 10:30 a.m. and there was a lot of no extension on the 5, but a lot of extension on the 15, you could make the argument that it's a momentum trade. I would not consider this to be a momentum trade. No, I think you traded perfectly. Just didn't work. I don't think my high blood pressure is caused by my skiing, Josh. Though when you're standing at the top of a 8-foot cliff, considering skiing off of it, the blood pressure probably increases. From Dave, just to add on to my earlier question, I remember the IWM poking a new, I assume you mean high, on late October, only to then make this really high time frame bullfrag that looks to be completing somewhat today. Yeah, I think that you're talking about what I'm talking about with this bull flag. You can see it clearly on the weekly chart here and here. That's what you're talking about. Or wait, October? Let me reread what you just said. Poking a new, I don't know what you new something, new low. Late October, only to then make this really high time frame bull flag. Looks to be completing. Yeah, I forgot it ticked that new low. This is a classic example of how markets can move in the other direction easier after a false break. This was a false break of support here that you can clearly see on this weekly chart, where they stopped out longs, they triggered in new shorts, and then that makes it even easier for the stock to move higher. I'm out, Aaron. They're moving GameStop now after hours. Beyond Meat just went to 15.50. Wow. The animal spirits are coming alive. Scrolling through here in the VTF. From Bill, summed up from Jem. In the current environment, the customers have been buying calls and dealers have been short calls. The last several days, as vol starts to decrease in those calls are decaying and the dealers are now having to sell out their stock. If you have that mechanic and then the index is getting pushed up, you get dispersion. And the Russell is now going to have to, or other entities are going to perform instead. Perfect. Perfect. Thanks, Bill. Dimitri, did you miss the entire afternoon meeting? I get it, though. Up at 15.50 there, it's getting a little ridiculous. But just be careful. Careful shorting that thing. Over on YouTube, Kevin mentioning LI's strength. Yeah, there's another one. From Eddie, can I take a look at CVS? Do I still have a weekly chart up? CVS is a boring stock. Chart has been consolidating for the past few weeks from 76 to 78. I don't know what to make of it. I wouldn't make anything of it. It's a drugstore. It's a consumer staple. It doesn't move very much, and it's in a consolidation. That's what these stocks tend to do. And it's a consolidation that's within the middle of a broader range. I don't like trading those. I think it's a coin flip, higher or lower, and if anything, it's worse than a coin flip because it has the capacity to shake out on the upside and then fail, or shake out on the downside and then fail by nature of it being a range within its range. I would avoid this chart. I would avoid this stock from a trading perspective for now. XBI, yeah, we're seeing XBI run. The Viking Therapeutics, what is that? VKTX obviously really helped this XBI go today. But yeah, I mean, this is the area we've been talking about this XBI a lot, and it gave great continuation today. XBI has shown, and this is exactly what should be rallying now with the IWM, but even better because it's shown so much relative strength this calendar year so far. From Chris K, you ever have a day where every trade you open fails in the morning? I've had many of those days. Any tips on dealing with that frustration? Or do most traders have a much higher accuracy? I tried like 5 trades all in the morning. Do I have any? Have I ever had days like that? I sure as heck have. I've had many, 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 many days like that. It's just part of trading. What I need to do to remind myself if I have a series of failed trades like that is I need to take a step back and remind myself that my process is correct. So I want to go back and re-review all those trades. And I basically want to ask myself, was my process correct? Was my process in line with my edge? Did I put myself in the position to make money by taking these trades? If the answer is yes, yes, and yes, then you know what, you're working in a game of probabilities, and you will have instances where the coin lands on tails 5 times in a row. It's just part of it. You might also want to consider though giving yourself we give ourselves like a limit down over the course of an entire trading session, but you can give yourself like similar limits for periods of time. If my first 3 trades that happened at the open all failed, then I'm going to take a step back and not put any trades on until noon and then obviously noon's a crappy time to trade, but you know what I mean. Just setting additional rules for yourself, because sometimes it's what I talked about where probability just doesn't work out. Other times it is we all have bad days also. I got a horrible night's sleep last night. True story. Which I wasn't going to talk about, but I think it just makes sense to talk about based on your question. I had a horrible night's sleep last night. For whatever reason, and I think this happens to everybody occasionally, I'm usually a pretty good sleeper. I woke up at 1 o'clock in the morning. I was restless. I just had too many thoughts going through my head. I got out of bed. I tried to just kind of reset a little bit. I went back to bed and super restless. I couldn't fall asleep. I got out of bed again. I tried to lie down on the couch. I couldn't fall asleep. An hour later, I went back to bed for a 3rd time. Finally was just about to start to fall asleep, and the plow came through to plow the road, and he must have had his reverse on, and I'm just hearing the beep, beep, beep of the reverse, and I'm right back awake. And then finally, I fell back asleep again, and then my alarm went off 20 minutes later. I got a terrible night's sleep, and sometimes that can happen and can lead to your mind is just off. You're not trading correctly, and it's important to recognize that. I know that for myself, just because I've been trading long enough. When I have a situation like last night, which doesn't happen too often, but happens every once in a while, or once in a while more when I'm in New York than I'm in Idaho. I was out late with friends and, had some drinks and didn't get a good night's sleep. I make a very serious mental note of that to myself in the morning when I'm doing my pre-market research, that my head might not properly be in the game, and I should inherently forget about trade setups and everything else for a minute, take a percentage off risk on new trades that I put on that day because my mind's not right. So that's something you need to recognize for yourself also. So it can be a multitude of things. It could just be probabilities went against you, but you're doing all the right things, and that's something you should assess here in your afternoon research. And if that's the case, then just get back at it again tomorrow and don't let it bother you. Or it's some other factor that was causing your head to just not be in the game properly, and then you need to recognize that in the moment and not trade as aggressively because of it. Also, can T3 traders trade from British Columbia, Canada, if I take a ski trip there for a week or 2, or does it have to go through compliance? It depends which company you're trading through. If you're trading through T3 Trading Group, you have to email compliance and ask for their permission to trade abroad. They'll typically grant it for 2 to 3 weeks at a time, and not more than that. But you have to let them know your location, where you'll be, and how long you'll be there. Cool, Chris, no problem. Someone asking me about my thoughts on Apple. Yeah, Apple kind of saved the market today, didn't it? With that news of them not doing the electric vehicles and focusing more on AI. The important part of that was the focus on AI. Lots of chatter have been out there about, well, is Apple going to do any AI? Blah, 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 because they haven't been talking about it in the same way that Google and the others have. Some people have even attributed, I personally wouldn't, a lot of this recent weakness over the course of this calendar year so far to the fact that they haven't been saying that term AI as much as the other mega cap tech stocks, and then they did. And honestly, for anyone who's an AI doubter, I almost feel like Apple joining the club a little bit is further validation on AI kind of being here to stay for the foreseeable future. Apple, we talked about this 180 level as being super, super important, and if you lose that level, especially if you lose the market at the same time, you could see a big downside follow through in Apple. I think upper 160s is reasonable. But Apple's a very difficult stock to short. You are inherently battling a buyer that you know is going to be buying $25 billion of stock a quarter. What does that turn into per day on average? You know that buyer is there every day and you're battling it. So it's always a hard short. But because of the news, it was able to hold 180 on the fifth test today, which is impressive. Every time you test a support level, there's a higher probability that it breaks down. But it was able to 28 million a day. Is that what it turns into? I'll let you do the math on it. But yeah, it's insane. How many shares is that a day is what I would really want to know. And obviously it doesn't work out that way because you have blackout periods and periods of time when I'm sure the investment banker that is actually doing the buying for them is buying more aggressively and less aggressively. But I'm just curious about how many shares of mandatory buying, if you broke it out equally, that would turn into over $25 billion worth of buying from the company itself on a quarter. 154,000 shares a day, if your math is right. That's insane. That's a sick amount of buying. I know that the stock did 53 million shares today, and on average it does 40 million shares. But there's going to be a guaranteed 154,000 average bid per day in this thing from the company itself. That's such a crazy, crazy thing. That's why I love buybacks. That's why I was even excited about Zoom today because they announced a buyback. I mentioned, this is a thinner stock and it's weakened out a little bit because the earnings haven't been good. But this is when Coursera announced the buyback. Look what the buyback did to the stock here on the way up in a name that's thin. That's when it first announced its first buyback. It's important information to pay attention to that. You're shrinking the float. You're helping the stock go up even as it potentially maintains PE. It's great. So yeah, Apple's above 180 at new news. I think that's a game changer. Watch this pivot high from a couple days ago. If Apple can get above 185, they'll start looking really good again. And if Apple loses 180, then they'll start looking pretty bad. Appreciate the question. Thoughts on Chinese stocks. So we have Baidu tomorrow morning. I have no idea what the Baidu report will be, but I think that the stock is very cheap. No idea how it'll do versus expectations, but broadly, I like Baidu. I don't have a position in that one. I have a position in Alibaba. I have a position in JD. I'm still bullish big picture on these Chinese companies. I'm looking for that upside continuation. Baba's given a decent move here. I've sold a bunch of that. I don't have a huge position left anymore. JD, I'm trading differently. I'm being greedier with. I still have a big position in this. I need this JD to get back above 25, and it's been lagging a little bit. But we're just seeing almost every day headlines come out about the Chinese government attempting to do things to shore up their economy and shore up their stock market a little bit. So if you combine that with, I think, how cheap these stocks are trading historically on their forward PE, with China finally waking up to doing everything that they can do to boost their economy and boost these stocks, I'm big picture a big fan. Small picture, they're very hard to trade because they're super gappy. Nice job, Dimitri. $2 down off that high. Still not even to the after hours ADMA on the 5. Love it. Awesome. All right, looks like I got through all the questions in the VTF. Actually, was there a new person that was asking questions? Let me scroll up here. Oh, you're just asking about Barros. Yeah, Raj, you can direct those questions about Barros and stuff like that to whoever your Class B member is, the person who's potentially bringing you into the company that can help. All right, have a great night, everybody. Talk to you all tomorrow.